Hey, what's up, guys? Brad here. So today I want to talk about a new tool I found for the Magic Formula Investing Screener. And this is a tool that's going to allow us to apply the Magic Formula Screener to dividend stocks. So I was pretty excited to find this. Um, and I found it in this group. This is a public group, Value Investing. It's a Facebook group, and there's almost 102,000 members of this group. But this post popped up in this group, and it led me to this website, the Modern Value Investor, Value Investing for the Long Term. And these folks have created basically a magic formula screener for different kinds of stocks. Okay. Now, if you're familiar with the Magic Formula Investing Screener, you can't specify, what types of stocks you would like the screener to filter through. It takes the entire stock universe, anything over a minimum market cap that you set. And then the only other option you have is how many stocks it returns, 30 or 50. And of course, it doesn't tell you, it doesn't break out the two screening factors that it uses, earnings yield and return on invested capital. It just behind the scenes aggregates those scores and creates a list of the top results for that combined score. But with this new tool here from Modern Value Investor, we can actually look at the top magic formula stocks within the S&P 500. We can see the best magic formula stocks from the dividend aristocrats and bank stocks. Traditionally, the magic formula does not do bank stocks or financials. So that's pretty cool. So let's take a look at these dividend results. So, I dug into these top 10 results. You can see earnings yield ranges from almost 11, actually almost 15% down to about 5.7%. And if you don't remember, earnings yield is a measure of how cheap a company is. Okay, and then you've got your other metric, which is return on tangible assets. Now, Greenblatt in the Magic Formula uses return on invested capital, but this group uses return on tangible assets. Perhaps it's easier to calculate. And if you scroll down, you can kind of read about that, what earnings yield and return on invested capital are, and then how they define return on tangible assets. But return on tangible assets is a proxy for return on invested capital. So anyway, I looked at the dividend yields for these top 10 results within dividend aristocrats. And the highest dividend yield was actually Leggett and Platt at 4.5%. So, every $100 you invest in this company, every year you're going to get back $4.50. That's basically what the 4.5% yield means. And then you've got Triple M, 3M, has an earnings yield of 3.6%, and Nucor also has a dividend yield of 3.6%. So, if I'm interested in buying dividend stocks, this is a fantastic tool to kind of quickly screen, all right, what are the most compelling dividend stocks to look into based on how cheap the stock is right now and how good of a company it is, which is calculated by return on tangible assets. And of course, dividends aren't the only thing you can screen for here. You can look at the top magic formula results of all the companies in the S&P 500. And one that showed up, I'm actually pretty excited about, Micron Technology. Now, Micron is a company that was recently bought by Monish Pabrai. It was recently bought by Li Lu, who manages some of Charlie Munger's investments. And I know there's a number of other pretty good value investors who have bought Micron fairly recently. Now, Micron doesn't show up on Greenblatt's screener, the straight up magic formula screener. But it's very interesting that it shows up here. And look at that earnings yield, almost 18%. That is incredible. And then a very strong return on tangible assets as well. So, it just kind of gives me a nudge again to dive into Micron and take a deeper look at that one. And then if we scroll down, we can look at banks. There's a little bit of a different formula for how to calculate how good a bank is. Return on tangible equity is what they're using here. So, you can dig into these banks if you want. But that's pretty cool that now we have kind of a magic formula tool to look at bank stocks if that's an area that you're interested in exploring. And then I just want to take some highlights from this here. So earnings yield is EBIT, earnings before interest and taxes, divided by enterprise value, where enterprise value is market cap, which is really just the number of shares outstanding times the current stock price. And then you add the debt and you subtract the cash and cash equivalents. So it just kind of talks about, to avoid putting too much weight on only 1 year of earnings, we use the latest available 3-year average pre-tax earnings. So that's kind of cool. They took that from the book Security Analysis, which, as you may or may not know, is one of the books that really inspired Warren Buffett to really understand fundamental analysis when, looking for great investments. So that's a worthwhile read down at the bottom there. And then I just wanted to share real quick this about page, because there's some really good things here on value investing in general. We believe in the value investing philosophy, which starts with the understanding that stocks are not pieces of paper, but ownership shares of a business, okay? And that's really a core to Warren Buffett's investment approach, is that when you buy a stock, you're not buying it because of the wiggles it's making in the stock market. You're buying it because of what the underlying business, the prospects of the underlying business to make you money over the long run. We believe people have a hard time beating the market, not because it's extremely hard to do, but because the average investor lacks the patience. This is huge, guys. This is probably the number one secret of successful investing is patience, okay? And it takes years and years to really compound wealth. And it starts off slow. If you've ever looked at a compound interest graph, it's really the exponential growth chart. So it starts off slow, and then it just takes off like a hockey stick. But this patience is why so many investors fail to reach their investment goals, because they're not making money fast enough investing, and so they give up, but they don't really understand the power of compounding when you give it time, okay? And emotional stability to withstand short-term market volatility. I mean, this is fantastic. So many investors, they lack the patience because they get scared out of the market when things go south. They get fearful. They start to think, the market, it's a crooked place. It's, the whole thing is rigged. And so they get out at the exact moment when the smart investors are piling in, when prices have collapsed, when now instead of buying Apple at $300 per share, you can buy it at $150 a share, which, I mean, it's the same business. It's still Apple. So when you can get a deep discount on the stock price, obviously that's when you want to be piling in, not heading for the exits. So, I mean, I encourage you to read this about page. There's just so many gems in here about how to kind of set up your mental framework for long-term investment success. So that's it, guys. I just wanted to show you this website. It's pretty cool that you have these different options for, running the specific basket of stocks through a magic formula like screener. So that's all I got. Let me know what you guys think of these. And if there's any kind of dividend aristocrat stocks that jump out at you that are showing here on this screener, any that you're particularly intrigued by. All right, guys, that's all I got. Smash that thumbs up button if you like videos like this. What day am I on? I am on day 74. This is my 74th day in a row of posting a video on my YouTube channel. So I'm excited. Things are really starting to hit that exponential growth curve with my subscribers and my watch hours. I think I'm going to be able to monetize the channel at the 90-day point, which is only 16 days from now. So, I'm pretty excited about that. I definitely want to celebrate that with you guys. So anyway, thanks for being here, and I will see you guys in the next video. Take care.